Welcome back. This is the Daytime Update. I'm Masachaba Mposwa, standing in for Michelle Craig. Now, the South African Federation of Trade Unions and the General Workers Union of South Africa say the Reserve Bank should abandon restrictive monetary policies to stimulate growth. Now, business reporter Ntokozo Khumalo is at the Reserve Bank ahead of the announcement. Ntokozo, now earlier you spoke to a business owner about their expectation. What is Labour saying?
Good afternoon, Masichaba. Well, basically, echoing the sentiments from the business sector, while the manufacturer of beauty products and skin products that we were with earlier, the CEO of Ivuna, said that she doesn't really watch too much the movement of interest rates, but instead just plans ahead to make sure that she is able to tackle any challenges that may come with interest rates, either going up or possibly the hold that some economists are expecting. So the vehicles behind me, people starting to make their way home in the next 30 minutes or so, they will know whether they'll be paying a higher premium on their vehicles and their houses. But basically those labor unions, Masichaba, pointing to a low growth environment where restrictive monetary policy would actually be detrimental to then growth, specifically by the manufacturing sector, that creates those jobs. And as we did hear from the business owner we were speaking to earlier, Njanja, saying that she had to let go of some staff members, scale down on production and have production based on the orders that she receives, so that she can be able to have that wiggle room should interest rates start ticking up at some point in this year. So the unions arguing that it doesn't assist the economy to grow when interest rates are increased, and that the Reserve Bank governor should rather set those interest rates in line with inflation. Of course, inflation coming in for Feb at 3.2%, lower than that midpoint target, the SARB's midpoint target of 4.5%. So that being the union's argument that what is needed right now is for the economy to be revitalized so that sectors such as manufacturing can continue their productions at affordable rates, the import costs weighing on them, exporting their products also weighing on their ability to grow, and then of course, Masichaba, their ability to create those much needed jobs in the economy. So really a loop of factors that the MPC will have to consider when making this decision and the next decision. On top of that, those geopolitical risks as well that the members of the MPC will have to consider. But we'll be going inside, and in about 30 minutes or so, Governor Lesetja Kganyago will take the podium to then make that announcement on what the MPC decided, Masichaba.